Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 19th of March, 2021. We did see some selling here this week, although the semiconductors bounced back a little bit as well as the biotechs. Energy really got hit the hardest with oil itself down 5% and the oil stocks 7.5%. So let's take a look at the charts here and make some sense of it. The S&P 500 is right down to the 20-day moving average as well as the volume weighted average price from this prior peak. And when we look at a 65-minute time frame, you'll notice that this is important for a couple other reasons. That is the volume weighted average price from this peak over here, as well as the low that we made this month. That is where that volume weighted average price also shows up. So we got a bounce where it was supposed to bounce today. The bad news is we're on an intermediate term time frame is we're below a declining 5-day moving average. So when we are below a declining 5-day moving average, I consider the market from an intermediate term perspective as guilty until proven innocent, and that simply means we don't want to be buying the S&P 500 because money's flowing out of it, and we want to be more selective in the individual stocks that we own until this situation resolves itself and either goes back into this major uptrend that we're in, or perhaps we get a deeper pullback. And the reason that we avoid buying is because if it is a deeper pullback, we obviously don't want to be losing money as it pulls back. So if we see further selling next week, I think the year-to-date volume weighted average price, that's that thicker blue line right here, is probably likely to get hit, especially with that 50-day moving average. A lot of people will try to buy at the 50-day moving average, and oftentimes it goes down through it, and the more important level would be that year-to-date VWAP. So those are the levels that I have a closer eye on for next week. The NASDAQ is a little bit weaker. You can see that this market is below its year-to-date volume-weighted average price. We've closed below it the last 2 days, in fact. We're also below a declining 20-day moving average. The 50-day moving average is still advancing, but this is where we were 50 days ago. So next week, if we're in this area, that 50-day moving average will begin to flatten out and actually roll over. So that would be a little bit of reason for just a little bit further cautiousness on the NASDAQ. When we look at the NASDAQ, what a lot of people were looking at this week, and this is a 30-minute time frame, is that they were looking for this being a shoulder, this being a head and then a right shoulder for an inverted head and shoulders pattern. Instead, you can see we didn't see this market break beyond that neckline. It in fact failed. And when we go down to a 15-minute time frame, same kind of story here. I'm considering it guilty till proven innocent while we're below that declining 5-day moving average. We're going to have to get back to 318-ish to become more neutral from an intermediate term perspective. Some of the individual stocks are still set up nicely out there. Not, of course, the big names. If you look at Apple, for instance, it's still, it's got a declining 20 and 50-day moving average. Those, that just says stay away from it for now. There's no reason to look to buy a stock below its declining 20 and 50-day moving average. And that goes true for Tesla as well. I know people feel like they have to have these stocks in their portfolio and feel like they missed out on these big rallies and want to purchase them, but let other people create the support. Buy it a little bit higher when the buyers are in control is the way that I would always look at it. Some names that you might want to keep an eye on next week would include SIBO. Here's a daily chart, the weekly time frame. It came up to this level, retreated a little bit on lighter volume. Maybe it can push higher next week. These aren't recommendations here, and I certainly wouldn't buy them, any stock with a below declining 5-day moving average. So if I were to buy SIBO, this is probably the important level it needs to get above, and it depends on how it gets there. If, for instance, it went above there Monday, I wouldn't be interested in buying it because it would be extended, and look at the last couple times it was up there. Instead, I'd like to see it rally up, pull back, create a higher low, and then buy it right here with a stop underneath this level. Anyways, these are, again, just names to keep an eye on. CNSL, Consolidated Communications, broke some nice resistance here on an increase in volume. It had what looks like a shakeout the last couple days. It's still not quite ready yet. Looking looking at this 15-minute time frame, maybe back above this little band of resistance right here from the last couple days of, at about $7.10 per share. EXEL is another one that when you look at the weekly time frame, it has room to run up in this, it's in a bigger range, of course, this being the low end, but maybe it can run back up towards that 26 level. It's a constructive looking daily pattern worth keeping an eye on, as is Golar LNG, liquefied natural gas. Nice longer term, distribution up here, decline, accumulation, looking like it's getting ready to go into a stage 2 uptrend. The daily time frame, we have a rising 20 and 50-day moving average. It's trying to find support right here at the 50-day, as well as, more importantly, I think the year-to-date volume weighted average price. So we got a little pullback in here. In very short term, we have this pattern of lower highs and lower lows, so it's one worth stalking. It's not worth buying yet, but if it can do something like this and then maybe get going, that's what we would be looking for with a stop probably underneath this level if it sets up. KNX is I think, a boring name. It's Swift Energy, Knight Swift Transportation rather. Is this a big cup right here and then this being a handle? If you're into cups and handles, there you go. Put that one in your textbook. What's more important, though, is the pattern is showing accumulation. We have higher lows and more repeated tests of resistance on that weekly time frame. On the daily time frame, it's pretty choppy in here, so just be aware of the personality of the stock. Look at these big ranges that it has. To me, that's a turnoff, but maybe it doesn't bother you, or if you do get involved, you want to look at it here on a 15-minute perspective, and maybe even buying it above this level with a stop under here. Make the trade your own. These are just ideas, not suggestions to purchase. Semiconductors are a little bit neutral here with it below the year-to-date volume weighted average price. And by the way, one group that's been beat up a lot has been, of course, the weed stocks, and this video is sponsored by Microsectors. They have a 2 times cannabis. Now, I don't think that cannabis stocks are quite ready to go yet. There's been a lot of damage in there, but if you're looking at that group and you're looking at, maybe not getting involved in the individual risk, rather you prefer to diversify with an ETF, the MJO is one way to do that, and it's 2 times leveraged if you're sophisticated enough to handle that. You're looking at just MJ itself. It's holding on. It's starting to try to find buyers here at the 20-day moving average, just flattening out, a rising 50-day moving average rather, right on the year-to-date volume weighted average price. So maybe give them a look if you're into playing the weed stocks. Biotechs, as we know, this was the hardest hit group, and they rallied kind of right. I mean, these biotechs are really behaving well from a technical perspective, in that they came right down to the 200-day moving average, and then they bounced to where? Well, almost perfectly to the year-to-date volume weighted average price, and now we're seeing a pullback from there. So when we look at a 30-minute time frame, there's that year-to-date volume weighted average price. And each one of these candles is 30 minutes when I say that. We're stalling out right at the 5-day moving average. So this group, is possibly going to be the weaker one, and what we would want to see, again, talk about technicals and how well it behaves. This week on Thursday, it came down right to the volume weighted average price from the recent low. Then it bounced to the 5-day moving average. So if it's going to go lower, I think it's likely to do something like this and then get lower. We want to see that 5-day moving average flatten out, and then if so, then you've got perhaps a retest of this low over here, or at least the 200-day moving average in the biotech. So be aware, there's still a lot to be proven by this group for the buyers to regain control. Let's take a look real quickly at the Russell 2000. It kind of rested a little bit this week. Still probably the healthier, larger index. Still a nice pattern of higher highs and higher lows, a rising 20 and 50-day moving average. So I don't think that it's a buy right here, because we're undergoing a little bit of profit taking, and who knows what it turns into. It's just not worth buying the dip, because What if it continues to dip and sees further downside? That's not that's not what I'm looking for. It's certainly a possibility. I'm basically neutral on the Russell 2000. I hope you had a good week of trading, and I will talk to you again next week. Thanks for tuning in.